Dear students, today we are going to see how to make the journal entries in the journal, then how to do posting from the journal to the ledger account, and how to total and balance the ledger accounts in the ledger. We will go through all these steps through a very simple question, right? As you can see on the board, there is one question in the left hand side and a format of the journal in the right hand side. So in the question we can see there are some transactions given in the books of Himanshu. So we have to prepare these transactions in the journal of Himanshu. So how to convert this or how to make a journal entries from these transactions and record those entries in the journal. That is what we are going to see now. Dear students, as you know, in a business transaction, there will be two aspects. There will be two parties minimum, and there will also be minimum two accounts. This is what is double entry bookkeeping. Okay. Now see how to make this journal entries from the transactions. It is very simple. Okay, I will tell you the easiest way. You see, if you go through these transactions, we can see there are mainly two types of transactions. One is a credit transaction, another one is cash transaction. Okay, so we just focus on this particular aspect of cash. Right? So the first thing you have to do, you have to think when you get a transaction is whether that transaction is a cash transaction or credit transaction. It is very simple. As you can see, the first transaction, it is the business started with the cash. Businessman is starting the business with the cash rupees 75,000. Okay. Now in this transaction, there are two aspects. One is the cash aspect. Another one is capital. Okay. So here itself you will have to see that capital, of course, it is not written, but we know that when cash is invested in the business, it is called capital. Okay. So these are the two aspects. One cash, another one capital. Right? Okay. So these are the two accounts affected in this particular transaction. One is cash account, another one capital account. Now you just to see, as I have already told you, this is a cash transaction. Okay, so you just to see whether cash is going out or coming in. Okay, so dear students, here we have to understand one important thing, that we are making these accounts from the business point of view, not from the businessman personal point of view. Okay, so as we can see, when the businessman invests money into the business is getting capital. Okay, so we know that cash is coming to the business. So since cash is real account, you just follow the rule of real account. What does the real account rule say? Real account rule says that debit what comes in and credit what goes out. So it is very simple. You debit cash. So cash is to be debited, and which is the other aspect. When cash is debited, so of course you will have to credit the capital account. Right? So it will come automatically. So cash account is debited and capital account is credited. Okay, you can see cash account is debited, capital account is credited. Okay, so here the journal entry is made. So this is the journal entry. So now the big question is how this journal entry is written. in the journal. As you can see, the journal of Himanshu here, the format I have drawn, and the first column is date column, second column is particulars column, third column ledger folio, fourth debit, and fifth credit. So two amount columns are there, where we will be writing debit amount and credit amount accordingly. Okay, in the date column we write the date in chronological order. Okay, date by date, as and when it happens you have to follow it the chronological order. And in the particulars column we write the journal entry along with the narration. And ledger folio column we won't write anything. This in this column the businessman will be writing when he transfers a particular journal entry from the journal to the ledger. So to which page number of the ledger that particular account goes, he will write that particular ledger folio number there. Okay, so for us we will just leave it blank. Okay, and in the debit amount column we write the debit amount, and credit amount column we will write the credit amount. Of course both the amount will be same, or it should be tally. The total of debit and the credit column should be tally. Okay, now I will just show you how this particular entry is written. You see here cash account is debited. So in the particulars column of the journal we simply write this cash account in the debit side. How I will show you. You just write cash account here. Okay, see cash account is written on top as the first, on the first line cash account is written, and here you write debit, right, close to this line. Okay, at the end of this particulars column. So it is written cash account debited. DR means debited. Okay, now what is credited? So debited account which is debited will be written first. Then below that account we write this credit entry, or the account which is credited. Here it is capital account, so that will be written in this way. You leave a little bit of space and you write capital account to capital account. So cash account is debited, here it is debited. So cash account debtor means cash account is debited. To capital account means capital account is credited. So here the word CR or credited is not written. To capital account means capital account is credited. Okay, and cash account debited, you write the amount 75,000. Of course here the amount, both columns it will be same, it is written. And just to describe this journal entry, just to explain this journal entry, we write a short description at the bottom, or after this, or below this two accounts, that is being business started with cash. Okay, and this is known as narration. A narration explains a particular journal entry. So looking at the narration, one can easily find out what is the journal entry, why cash account is debited and why capital account is credited. One will get the answer. Okay, first journal entry. You see the second journal entry, it is about purchased goods for cash rupees 10,000. So here the two accounts affected, of course this is a cash transaction, and the two accounts affected you can find out very easily. One will be surely cash. If it is a cash transaction, dear students, it is very simple. One account will be cash account, then you have to find out the other account. Okay, here the other account is purchase account. Okay, it is purchase account. We will not write goods. Actually it is goods, but we don't write goods. Why? If we write goods, then we may not get an idea whether it is goods purchased or sold. For sold also there is, for sale also there is goods, for purchase also there is goods. So to avoid confusion, we write specifically for purchase, you write a purchase, for sales, you write a sales. Okay, so purchase is one account, cash account is another account. So here also you simply see the rule. You see what is happening to cash. When we purchase goods, cash is going. So you follow the rule, credit what goes out. So we have to credit, right? You credit the cash. So when we credit cash, the other account, it will be debited. Okay, so credit cash, debit purchase. So purchase account is debited, cash account is credited. Okay, so how it will be written? In the same way, we will write this journal entry also. Okay, so you can see it here. Okay, you see how it is written. Purchase account is debited and cash account is credited. So how it is written? Purchase account debited to cash account, and the amount is 10,000. You can see it here. You can see the amount, and debit amount and credit amount both are same, and a brief explanation is written. Explanation is written in very short way. Being goods purchased for cash, right? Now the third question, I mean the third transaction. You see the third transaction, it is sold goods to Swati. Okay, in this particular case, you see there is a difference. This is not a cash transaction, it is a credit transaction. How do we know that this is a credit transaction? This is credit transaction because the Swati's name is mentioned. If a party's name is mentioned and it is not mentioned whether it is cash or not, then we assume that it is a credit transaction. So goods sold to Swati, it is a credit transaction. That means money is not paid immediately. Okay, who? Swati has not paid the money to the business. Okay, so it's a credit transaction. So one account affected will be Swati. In place of cash, it will be Swati now, and the other account is not sold but sales. Okay, we will not write sold, we will write the noun form sales. Okay, similarly for purchased, we write purchases or purchase. For sales, we write sales only, not sold. Okay, now here you see, when cash is not there, now what to do? You have to apply the other rule of personal account. You see the personal, this Swati is the name of a person, so the account affected is Swati's account. It is a personal account, so apply the rule of personal account. Debit to the receiver, credit to the giver. Okay, so here who is the receiver? Here the receiver is Swati. Okay, in this particular transaction you can see the receiver of goods is Swati. So there are two parties, one is receiver, another one is the giver, right? So Swati is the receiver here, and so you what do? You simply debit to the receiver. Okay, so if real account rule is not applicable, you find out personal account rule. Okay, you see personal account rule, follow that rule. So debit to the receiver, Swati is the receiver. Okay, so Swati is debited. So when Swati is debited, it is very simple, no need to check any other rule or anything. You just see the opposite account, the other account, that will be just, its treatment will be just opposite. So when Swati is debited, this sales will be credited. It is very simple, dear students. You follow the rule for one account, then the other account it will be just opposite, right? So Swati you debit, sales you credit. Now how it will be written? See, dear students, how this entry is written, you just see. Swati debtor to sales account. Again narration is written, amount is written 5,000, 5,000, right? So this is how we make the journal entries. I hope you have understood how the journal entries are made. Once you understand how this journal entry is made, you get that technique, it will be very easy to make the journal entries and you can finish up the journal entries very fast. Okay, now next one, purchased furniture. Here also it is a cash transaction. How do we know that it is cash transaction? Because we have to assume, so here there is no party's name is given. Okay, no one's name is given, so it is understood to be a cash transaction. So here furniture is coming to the business. Of course furniture is a fixed asset, so for fixed asset the affected account will be furniture. It is different. Okay, furniture will be the affected account, not purchase. Why? The term purchase we will use only for goods. Goods are something which is bought for resale. Okay, but furniture is not purchased for resale. It is purchased for running the business. Okay, so furniture will be used by the businessman to run the business, not for sale. Okay, so we write the name of the fixed asset in this particular case, that will be furniture. So furniture account is coming to the business. Furniture is asset, so it is coming to the business. So debit what is coming in? You debit furniture. So what is to be credited? It will be cash. Again, you can see the other way around. Like when we purchase furniture, cash is going out. So when cash is going out, cash will be credited. You credit what is going out or credit what goes out. So credit for this transaction, you credit cash. So when you credit cash, you debit furniture. Okay, so you can see both ways. You just see apply the rule for one particular account, then the other one will follow automatically. So here furniture account is debited, cash account is credited. Okay, so here the other account is cash. Okay, I write C for cash, and furniture is there. Furniture is debited, cash is credited. Okay, now how it will be written? It will be written like, see, furniture account is debited and cash account is credited. Furniture is coming to the business, cash account, cash is going out of the business. Okay, we write the narration also, that is number 12, right? Okay, now see the next transaction. It is cash received from Swati in full settlement. Here you can see Swati had purchased goods from the businessman. You can see it here. December 8 transaction. You see sold goods to Swati 5,000. Okay, and Swati did not pay the money. Right? Swati was the debtor. So now Swati is making the payment. Okay, maybe Swati is making an early payment. So Swati's account is closed. Right? See here, cash received from Swati in full settlement 4,000. So Swati has to pay actually 5,000. You can see it here. But here Swati is paying only 4,000. But it is said in full settlement means account is closed. That means the remaining 1,000 is discount. Discount given to Swati. Okay. So this is a cash transaction. So the two affected accounts will be, one will be cash, another one is Swati, right? One is because a party is there, so Swati is giving the money. Okay, so Swati is the giver of the money, we can say. So Swati will be credited and cash will be debited because cash is coming. So now you see how this account, particular account is written. Cash account is debited because cash is coming. Discount account is debited because discount is a loss. We give discount to Swati, it is a loss to the businessman. Now Swati's account is credited because Swati is the giver of the money. Okay, and Swati's account is closed also here. So here you can see for date 9 Swati's account 5,000 debited and now Swati's account 5,000 credited. Okay, so in that way Swati's account is closed also. And the narration is also written. And here another important thing. Okay, it's a technique rather. You remember this technique. Okay, that is, you just consider these two accounts. Just see these accounts, cash account and discount account, both are like Siamese twins. You just think cash account and discount account are Siamese twins. Siamese twins means they won't be separated. They will be always coming together. So if cash account is debited, discount account also will be debited. If cash account is credited, discount also will be credited. Both will be coming together always. Just to use this simple technique. Normally students make this mistake of putting this discount on the other side of cash account. No, you have to write both together, then only the entry will be matched. Okay, so that is a journal entry number 18, date 18. So that is done. Now Okay, next two entries, the last two entries, it is very easy. You see paid rent. You see paid rent. So both December 25 and December 30, both the transactions are cash transactions. You just see paid rent means paid cash as rent. So cash is going out. Both cases cash is going out. You can see paid rent, paid salary. Okay, cash is going out. So when cash is going out, you credit the cash. What you will debit? You debit the expenses. You see, in this case it is rent. In this case it is salary. You debit rent in the first case, credit cash. In the second case, debit salary, credit cash. So first case it will be rent account debited to cash account. Second case it will be salary account debited to cash account. Then another explanation why this rent account and salary account is debited. Both are nominal accounts. Both are expenses. Okay. And for this nominal account, for the expenses, you will have to debit. You remember the rule of nominal accounts. Debit all expenses and losses. So rent is an expense, so you debit. Salary is an expense, you debit. So when you debit both expenses, automatically the other account which is credited will be cash. So there this real account rule is applied. So this is what I said. You apply any one rule for any one aspect, then the other one will happen automatically. Okay, it will follow automatically. You need not do anything extra. Okay, it is very simple, dear students, making this journal entries. So now you write this journal entries. Okay, dear students, now we have made those journal entries also. 25 and 30, you can see rent account is debited and cash account is credited. In the next case, salary account is debited, cash account is credited. Here also you give the narration. In both the cases, you simply write a simple narration, being rent paid and being salary paid. So in this way, we can easily complete making the journal entry. So this procedure is known as journalizing, writing the journal entries in the journal book of the business. Right? Now, what is the second stage? So after preparing the journal, we have to take all these journal entries to different accounts. Remember, for all these accounts, we have to open ledger accounts. Okay, so ledger account is a type of sorting of the accounts and putting the similar accounts in a place, and that particular place is known as accounts. And this will happen, or this particular the formats or the accounts are recorded or maintained in a book called ledger. Right? Now we are going to do the next stage, that is posting of this journal entries from the journal to the ledger. Okay, right. Now dear students, now you can see the journal of Himanshu. We have already made the journal of Himanshu. All the entries are there. You can see in the left hand side, and right hand side I have drawn different accounts, different ledger accounts. In the ledger you can see cash account, you can see capital account. The biggest one and the most important one is cash account. You see cash account comes so many times here in this journal. You can see cash account comes so many times. Okay, so cash account will be the most important one, the biggest one. Okay, anyway, so the cash account, I have drawn the format of all the accounts: cash account, capital account, purchase account, Swadhi's account. So you can see all the accounts one by one. Okay, so we should not leave any account. We have to draw all the accounts. That is step one. So what we are going to do now, we have to post this journal, or we have to transfer these entries from the journal, from the left hand side to the right hand side, or from the journal to the ledger. In the right hand side, this is the ledger book, and in the ledger book you can see all the ledger accounts. Okay, this particular process is known as posting. Right? Posting means transferring the journal entries from journal to the ledger account. Right. Now you see the ledger account format also. Here date column is there. You can see particulars column is there. There we will write the particular journal entry. That particular account we will write. Then it is journal folio. Here we will write. We will not be writing anything. Rather, the businessman will write the journal folio, similar to ledger folio. In the journal, you can see the ledger folio here. You can see ledger folio, and here the journal folio, it is just opposite. This journal folio is the page number of the journal, ledger folio is the page number of the ledger. Okay, so this is for practical purpose. We don't have to do anything about this LF and JF. We won't be writing any folio numbers, so this is for the businessman to write. Okay, when he is doing the posting, he will be writing the page number separately. Okay, this is like giving an index. You also do this index in your copy, and which question comes on which page, which notes comes on which page, you write in the index the page numbers. Okay, in that way. So this is very familiar to you. This concept is very familiar to you, and it is very simple. Okay, so that is ledger folio and journal folio, right? Okay, now in the debit side, the last column is for amount column. We write the amount. Okay, so the same columns are repeated in the right hand side. Left hand side it is debit side, right hand side it is credit side. Debit, credit. So these accounts will have two sides, debit side, credit side, and in each side there will be basically 1 2 3 4 columns. Okay, so total 8 columns will be there: date column, particulars column, journal folio, amounts column. Okay, and here for convenience I have given only the cash account, the details here on the top. Okay, it's not that much important. Here also all the capital, all the accounts, there will be what to say, the details and all, but for the for convenience I have not written the details here. Okay, so to make it easier, so only the lines you can see, but remember one thing, for all the accounts there will be this details written. Okay, right. So here I have written on only for this cash account on the top. This is the first account this side, so I have written the details, and for sales account also you can see this details here. Okay, but remember these details will be coming for all the accounts. Okay, right. Now how this posting will be done? Okay, now listen very carefully. Now we can do this posting in two ways. You can prepare all the accounts in advance, then start writing each and every entry in the accounts one by one. Otherwise, you can go account by account. First you can prepare cash account, so you go through all the journal entries, you pick up all the cash account entries and you put it in the cash account. After completing cash account, then you prepare capital account, then after completing capital account you do the other accounts like that. Okay, so either at a time or one by one, no problem. You can follow this posting using different methods, no problem. Okay, as and when you learn, you practice more and more questions, you will have your own style of the posting, so it is not a big problem. Okay, now you just listen how it is posted. So I follow this entry method. Okay, like each account we pick up and put it in this, because already all the formats are there. Okay, so I have drawn all the formats, so I will go to each entry and pick up those accounts and put it in their corresponding places, right? Now see the first entry. The first entry is cash account debtor to capital account. So here what you have to do, you have to simply see the cash account, the first account you have to see. So this is the account, see, cash account. So pick up that cash account. Okay, I will just show you how it is written. Okay, you just see, look at the first entry, it is cash account. This is cash account. I am circling for your benefit. Okay, for you, no need to do this in your copy. Cash account is debited, and where is the cash account? Cash account you can see here. This is cash account. Okay, now in the first entry cash account is debited. So what you have to do, you have to simply put this cash account in the debit side. Here it is debited, So you just find out the debit side. This is a debit side, left hand side. So this entry will go to the debit side. Which is the debit side? You see, this is the debit side. Okay, so you simply put it in the debit side. How it will be put? You just see. I will just show you. This is the, what to say, the date. First we write the date, because date is the 2017 December 1. Put the date. This is a debit side, dear students, and you simply write to capital account. Okay, here I will tell you why this capital account is written. This cash account is debited, so we cannot write the same account, the same term inside the cash account. So what do? We write the opposite account. Okay, that is the referral account. So this referral account, the opposite account which is there in the opposite side, we write inside the cash account. So inside the cash account, we will not write to cash account, we will write to capital account. The other referral account will be written. That is very important, dear students. Very important. Okay, in every account we will not write inside the same account name. It will be the other referral account, right? Because so that means, because of capital, the cash account is debited here. That is the meaning. Okay, so here it is debited, and you put the amount here. Okay, fine, 75,000 it has come. Now the same process will happen for capital account also. You can see capital account is credited. Here you can see it is credited. So you find out capital account. This is capital account. You come to capital account credit side. So this is the capital account credit side. So from here, from credit side, you can see this item will be coming in the credit. This is credit side. So simply put it there. And when you put up, you don't write a capital account, you write a cash account, the opposite referral account, cash account. So it will be by cash account, dear students. Okay. So how it will be written? See how it is written. The same date, then it is written by cash account. Now I hope you understood how these accounts are written. How these accounts are written in the corresponding places. Right? So the first entry. So when we do one more entry, you will get it very clear. Okay. Now the second one, you see purchase account. Purchase account is debited. Where is purchase account? You just find out purchase account. See here there is purchase account. So purchase account, it is debited. Right? So purchase account, it is debited. So you come to purchase account debit side. You can see purchase account debit side. See how it will be written. It will be written to cash account. You don't write a purchase account. Inside the purchase account, we write to cash account. The opposite referral account will be written. This is the referral account. So it will be written as cash account. Okay, to cash account. So purchase account is debited. So we put up. You just see an account whether it is debited or credited. Then you see the place. If it is debited, it will be coming in the debit side. If it is credited, it will be coming to the credit side. It is very simple. But when you write the opposite account. Okay. So purchase account is written. Then similarly, the second entry you can see to cash account. The second entry you can see to cash account. So it will be coming in the cash account. You can see. So in the cash account, it will be coming in the credit side. So how it will be coming? By purchase account. Clear? So you write the date. You write December 7 and see how it is written. By purchase account. By, why it is written by? Because it is written in the credit side. So in the debit side we start with to, credit side we start with by. Okay, that is the standard rule. So it is written by purchase account 10,000. Right? So in this way you complete all the accounts one by one. Right? So as an example, in purchase account we write to cash account. In cash account we write by purchase account. Next you see, I will just show you how it is. Okay, fine. In Swadi's account you can write to sales account in the debit side, and in sales account we write it as by Swadi's account. Furniture account you write to cash account in the debit side, then in cash account we write by furniture account, just opposite. Then for question number, the transaction number 18, entry number 18, date 18, cash account is debited. So in the cash account you have to see this is a combined entry. This particular entry is known as a compound entry. So in this compound entry you can see three accounts. Cash account is debited, discount is debited, Swadhi's account is credited. So you debit cash account. In the cash account you debit this 4,000. Remember, you have to write only 4,000. You have to write 4,000 only. So you can see 4,000 is debited, and when you write this cash account 4,000 in the debit side, you have to write the referral account to Swadhi, and the amount will be 4,000 only. That is very important. Then discount is also debited, so in the discount account we write this 1,000, and the referral account will be Swadhi's account. Then in Swadhi's account, when we write by cash account, by discount account in Swadhi's account. So I will just show you how all these entries are written now. Now you got a fair idea of how these accounts are transferred from journal to ledger account in the same site but with opposite referral account names. Now I will just show how it is written. Okay, now I have written all the accounts in the corresponding places. Okay, you can just look at how these accounts are written. Okay, cash account it is done, all the accounts are written. Capital account also it is written. Purchase account you can see, Swadhi account you can see, and sales account it is written. Per furniture account, discount account, salary account, rent account. Okay, so all the accounts have been written in this way. So this is how you have to post this entries to the opposite sides. Okay, so after completing posting, we have to total the accounts. The businessman will total the accounts and balance accounts. So now I am going to tell you how these accounts are totaled. So here I will use two sample accounts. One is actually three sample accounts I will total. One is cash account, another one is capital account, another one is Swadhi's account. Okay, so I will just show you how this account is totaled. Now see the cash account. In the cash account, what you have to do, you have to see both sides. Okay, the debit side as well as credit side total. See the amount column. Okay, so both the total you have to take. Okay, but for cash account, normally what happens, the debit side will be always more. Okay, debit side will be always more. So you take the total. Of course, you have to take both. So you will find that the debit side will be more. So the debit total you take 75,000, 4,000. You simply find out the debit total. Okay, so step number one, you take the total of both the debit side and the credit side and write the bigger total. Which is the bigger total? For cash account, the bigger total will be the debit total. So put it there. Where you put it here. Okay, so just where there are more accounts, more number of accounts, which side there are more number of accounts, there you leave one extra line to write the balance. You can see in the credit side there are more accounts, so there you leave one extra line, then you write the total, right? That is a standard rule. Okay, so that we get sufficient space to write the balance. So here the 79,000 has come, that is the total, right? Now you find the total of the credit side. Okay, and you subtract that total from the main total 79,000 and write the balance here. Where there is shortage, you put it there. So you will find the credit total 15,500 is a credit total. So subtract that 15,500 from 79,000, you get 63,500. Put it here and write the balance in this way. How? You simply write the last date of that month. Okay, here it is December, so December 31st, and we write it as by balance carried down. By balance carried on. This is the closing balance. So this closing balance will be the opening balance of the next month. Okay, so from here it will be taken to this side. Okay, So the same figure we will write here, this also the balance. Okay, you can see the balance is transferred from credit to debit side. So this is the debit balance actually, but we write this just to tally the what to see the totals. We will write the balance in the credit side, but of course this cash account has got a debit balance. Debit balance means debit side is more. So which side is more, that side has the balance. So cash account has got a debit balance and it is written in this way. Okay, first it is written as closing balance, balance carried down, and when it is brought down to the opposite side after the total, we write it as to balance brought down. Okay, right. So this is how an account is balanced. Now I will show you another one also. Like here there is a capital account. Here there is only one entry is there in the right hand side. Okay, that is in the credit side. So this also we can balance. So when we balance this one, again you just leave one line, the standard procedure, leave one line and write the total. Okay, one or two lines you can leave and write the total. See, the total is written. How much? It is 75,000. 75,000. That is the total. And this total will be the balance also. Right? This will be the balance. Nothing is here in the debit side. So 75,000 is the balance. So this is a closing balance. So write it as to balance carried down. And the this is not this should be December 31st, so you put it as December 31st. Okay, here January 1 is written, it is December 31st. Okay, make the correction, and here this side it will be, you can see by balance brought down. Okay, here it will be January 1st. Okay, so you correct that one, so it will be January 1st here, right? Okay, so that is capital account. So in this way capital account is also balanced. Okay, so closing balance will be written against to the last date, okay, of that particular period. Then opening balance will be the next day. Okay, so on accounts one, the closing balance will automatically become the opening balance of the next month or next period. Okay, simply see the balance, which side the balance is coming, balance brought down is coming, that will be the true balance. Okay, so cash account is having debit balance, but the capital account you can see it is having credit balance because credit side is more. Purchase account is having debit balance, so this also can be balanced in the similar way. Okay, and see the other sample account I will be balancing is Swadhi's account. Swadhi's account you can see both sides same, 4,000, 1,000, 5,000. So here also 5,000. Okay, so this particular account has no balance, it is closed completely. There is no balance, so no need to write a balance. So I have shown you three types of balances here. So in the capital account it will be credit balance, cash account it is debit balance, capital account it is credit balance, purchase account debit balance, Swadhi's account there is no balance, sales account you can see it is credit balance because credit side is more, furniture account it is debit balance, discount account it is debit balance, salary account will be debit balance, rent account will be debit balance. So these are the different balances of ledger account. In this way the businessman will complete the ledger account. Now I hope you understood how this ledger account is totaled and how the ledger account is balanced and how to consider the different balances, maybe debit balance or credit balance. And since we have followed this double entry bookkeeping, we have taken the different two aspects of a particular transaction and put it in the debit side and the credit side, and from there we have posted to ledger account. And if you do it without a mistake, okay, if we do the totaling, transferring, totaling, balancing without a mistake, if it is arithmetically accurate, we should be getting the total of debit and total of credit equal. So how to check it? So we simply complete all the ledger account balances, then put up all these account balances one by one. You write all the account starting from cash account. Cash account, what is the balance? You can see balance is 63,500. That is a debit balance. So like that, you write all the accounts with the balances one by one, 1, 2, 3, 4, 5, like that. Write all the accounts. Then take the total. So some accounts will have debit balance, some accounts will have credit balance. Okay. So you make a statement of all these accounts with the balances and take the total. And if everything you have done everything arithmetically correct, you will be getting the both of the balances, debit balance and the credit balance, total equal. In this way you can check the arithmetical accuracy of your procedure, total journalizing and the posting procedure. Okay, see, now I have taken all the balances, all the account balances one by one. Cash account, it has got a debit balance because debit side was more. Capital account, credit balance because credit side was more. Purchase account, debit balance. Swadi's account, there was no balance, so 0 it is written. Sales account, credit balance. Furniture account, discount account, salary account, rent account, all the accounts have got debit balance, and we have taken all the balances total. See, debit total 80,000, credit total 80,000. Okay, particular concept, this particular principle is the what to say, is the mm, base of double entry bookkeeping, dear students. Okay, so in case you don't get this total, then you have to assume that you have made a mistake. Somewhere there is a mistake. You will have to find out the mistake and correct it. Otherwise, both is the debit aspect and the credit aspect, the total should be coming same. It should be tally. Okay, I hope you have understood this particular topic, how to make the journal entries, how to make the ledger accounts, how to prepare the ledger accounts, and how to do the posting, then how to total, and how to total the ledger accounts, and how to balance it, and how to prepare trial balance. This particular statement, when we prepare a statement in this way and check the arithmetical accuracy of our procedure, we call this particular statement trial balance. This is what is trial balance. Okay, so trial balance can be prepared using the total method and balancing method. Here we have used the balance method. You can follow this balance method, or also you can follow the total methods, no problem. I hope you understood the whole procedure of journalizing, posting, and making trial balance. Okay, right.